Craftsman automation post listing. Is it good for long term or is it time to exit? If you had subscribed for Craftsman Automation Limited's IPO, there's a higher possibility of getting an allocation as it got oversubscribed by 3.82 times only. Its shares got listed on the bourses at 1,359 rupees, which was at 8% discount to the upper end of the IPO price. But the good news is that demand has picked up post-listing and price is up 4% from the listing price. The weak listing was due to coming off 5 IPOs in the same week as well as weak market sentiments. Craftsman is a well-diversified engineering company operating mainly in 3 segments: automotive powertrain and others, automotive aluminium products, and industrial and engineering segment. Powertrain and other segments contribute 51.2% of total revenue, aluminium product segment 21.1%, with industrial and engineering segment contributing the rest. So, the question for those who will be allocated shares, should they book a profit and exit? And what about other investors? Should they buy Craftsman's shares at market price? Would it be a good addition for the long term? Despite the issue coming at a fair level of 37 times price to earnings multiple for FY22 earnings, there are still multiple growth drivers for the company that would add further value to the share. Debt reduction. Using the IPO proceeds to reduce debt will provide a kicker to future earnings. Leadership position. Craftsman is the largest player in machining of cylinder blocks and cylinder heads in the intermediate, medium, and heavy commercial vehicle segment as well as in the construction equipment industry in India. It is also among the 3 to 4 component players providing machining of cylinder blocks for the tractor segment. Let's talk about its robust demand. The new scrappage policy and the promise to increase investment to revive economic growth in the union budget is expected to boost demand for the commercial vehicle segment. Craftsman generates most of its revenue in the automotive powertrain segment in the commercial vehicle space, and hence any increase in demand in the segment will boost its revenue. The outlook for passenger cars and two-wheelers has improved significantly owing to high pent-up demand, preference for personal mobility, and first-time buyers. The company has been aggressively exploring upcoming opportunities in aluminium segment. With the transition towards advanced emission norms, it is expected that the aluminium content per vehicle is expected to rise significantly. The transition of tractors to BS6 from April 2021 will boost the demand for the company. The thrust on electric vehicles is also expected to lead to an increase in aluminium content as EVs need to be light in weight to provide good mileage. Craftsman has the technological know-how to redesign the casting products to suit the electric vehicle segment. Now let's talk about its strong financial performance. Despite a flat growth in the top line over FY18 to 20, the company has been able to register a compounded annual growth rate of 15.4% in its earnings before EBITDA. The company's EBITDA margin of 27% in FY20 and 28.8% in 9M FY21 is the best in the industry. The profit after tax also grew at a compounded rate of 14.1% over FY18 to 20. So, it's a good stock to hold for the long term.